So Marriott International just closed the books on what they're calling an excellent year. But what does that really mean when you're a hospitality giant of this size? Well, in this explainer, we're going to unpack their 2025 performance and find out what's really driving their success.
I mean, we all know the name, right? With a huge portfolio of brands that you can find pretty much anywhere you travel, Marriott is an absolute force in the world of hospitality.
Okay, so the company line is that it was an excellent year. But you have to wonder, right? Is the whole business firing on all cylinders? Or is there maybe a more complex story just under the surface? That is exactly what we are here to figure out.
All right, so let's kick things off with the big headline wins that really defined Marriott's performance in 2025.
And you don't have to take my word for it. Let's hear it straight from the top. The president and CEO, Anthony Capuano, points to their strong brands and a ton of development for the great results. The message from the C-suite is crystal clear. 2025 was a huge success.
And that success, it's not just talk. It translates into real, tangible value. $4 billion. That is the incredible amount of cash Marriott pumped right back to its shareholders. That signals some serious financial health and a whole lot of confidence.
And here's a metric that's absolutely key for the hotel industry, RevPAR, or revenue per available room. A 2% jump across their entire global system? That is a very healthy sign. It basically means, on average, they're making more money per room than they did last year. But that worldwide number, it actually hides a much more fascinating story.
Because when you start to peel back the layers on that global growth, what you find is a tale of two very different markets, and each one has its own story to tell.
And here it is. You can see the split plain as day. In the last chunk of 2025, international RevPAR just soared, up over 6%. But back on their home turf in the US and Canada, performance was basically flat, actually down just a tiny bit. So what in the world caused such a huge split?
Well, the report points to two main things. Internationally, it was a boom time. People were traveling across borders, taking leisure trips. That fueled some massive growth. But back in the US and Canada, an extended government shutdown really hit business travel hard, and that slammed the brakes on growth in that huge market. It just goes to show you how even a global giant can be sensitive to what's happening regionally.
But look, despite a few bumps in the road at home, Marriott is relentlessly focused on what's next, and their strategy couldn't be clearer. Build, build, and then build some more. This is the real engine of their long-term growth.
I mean, just try to get your head around the scale of this. In one single year, Marriott added almost 100,000 gross rooms to its system. That is an absolutely blistering pace of expansion.
And even after you account for any hotels that might have left the system, that still comes out to a net growth of over 4.3%. So this isn't just about adding hotels, it's about seriously expanding their global footprint, year in and year out.
And if you think that's impressive, just look at what they've got cooking. The pipeline of hotels that are either approved or already under construction has hit a brand new record, with almost 610,000 rooms. That is a huge sign of future growth and tells you just how much property owners want to be part of the Marriott family.
So this massive expansion kind of raises a big question. How exactly does Marriott's business actually work? Let's pop the hood and take a look at the model that makes all of this possible.
You know, the secret sauce is really this asset-light business model. See, Marriott generally doesn't own its hotels. Instead, it manages them and franchises them. They collect these high-margin fees for lending out their brand names and their expertise. This strategy lets them generate massive amounts of cash without having to tie up billions in real estate. It's pretty smart. Now, the other absolutely critical piece of this money-making machine is their loyalty program. It's a true powerhouse in the industry, Marriott Bonvoy.
The scale here is just mind-boggling. Almost 271 million members. That's a huge global community of travelers that Marriott can talk to directly, driving bookings and building that all-important brand loyalty.
And you can see its power right here. This isn't just some big mailing list. A staggering 68%, more than 2/3 of all room nights booked globally in 2025 came from Bonvoy members. The loyalty program is the engine that fills all those hotels they're building so fast.
So after a really strong 2025 that was fueled by international growth and a super powerful business model, what does the road ahead look like? Let's take a peek at their own forecast for 2026.
They're basically planning for more steady, confident growth.
They expect worldwide RevPAR to keep climbing, for net rooms growth to actually speed up to between 4.5% and 5%, and for an even bigger return of cash to shareholders, more than $4.3 billion. The machine is absolutely set to keep on humming.
Which really brings us to our final question. When you take a record-breaking pipeline of new hotels, combine it with an asset-light, cash-generating business model, and then you supercharge the whole thing with one of the world's biggest loyalty programs, you really have to wonder, is there anything that can stop Marriott's growth?